Adjust this during the session. So let's say other colleague join training or one, then baru you have this on slide of you and observation.
We're going to start now.
To you by FPAM. We're so happy to have all of you here today with us as we dive into the latest budget and its impact on the financial services industry. This session will give us some valuable insights into what the new budget means for financial planning, investments, and more. Before we begin, I'd like to say a big thank you to Arita Capital, our venue sponsor, for their kind support in today's event. We have a great program lined up for you today. First, look at an overview of the key points presented by Mr. Wong Chao Yang from Ernst & Young. And after that, we'll move into an engaging panel discussion with experts from the industry. And we'll end the session with Q&A. For our guests who are joining us online, please type your questions in the Q&A section, and we'll do our best to answer them. Before we start, I would like to request that our guests on site to silence your mobile devices, as well as keep as quiet as possible, because the microphone is actually capturing all the voices and sound from the space here. So let's get started. Let's welcome Mr. Wong Chao Yang, partner at the Ernst & Young Tax Consultants at Berhad. Mr. Wong joined the EY tax practice in 2015, bringing with him extensive experience in corporate tax. Since he began his career in 1991, he has held senior finance roles in various industries, including technology, retail, and distribution. He has also led GST implementation and managed corporate tax projects at global tax consulting firm. Today, we'll share his insights on key points of the 2025 budget and its impact on the financial service industry. Mr. Wong, over to you.
Thank you. Morning, everyone. Sound check. Can everybody hear me on the other side? Can. Great. Sorry, I thought today was like a formal setting where I had a podium and a microphone and all that. Different expectations. Interestingly, yesterday, because of the US elections, I think a lot more people here will be interested to hear about the implications of those results of the election and how it impacts economics, politics across the region and all that. I'm sure we'll touch on that afterwards. But so let me go through the boring stuff first, right? Then maybe we can deal with the more interesting stuff. Okay. Okay. So just a bit of context. So my presentation this morning is on Budget 2025, as you all know. So over the next 30 minutes, I've been allocated. We'll take a deeper look at the budget that was announced on the 18th of October. And for us to have a better understanding of the overall direction of what the government hopes to achieve with this. Now, we will start off by looking at the main focus areas identified in the budget. There are a few, you read the budget speech, you'll see that the government has a few focus areas, and we'll run through that briefly. We'll look at some economic data and statistics as well in the subsequent slides to give a bit of context as to the government's finances and the extent of our deficits and all that. And thereafter, we will then take a look at some slides on the specific budget proposals. So because all budgets will cover things like personal taxes, corporate taxes, RPGT, stamp duty, and things like that. Sounds like a lot to cover, but really I have 30 over slides. Okay, don't freak out. But my intention was really, I wanted to take things out from this slide, right? But I was thinking, I'll leave them in there, so for the audience to take away for your reference, because there are very specific things relating to, personal tax deductions and stuff like that, which you would have read extensively in the media announcements and things like that anyway. So I won't cover those things. They're in the slides. I will just skim through them, but they're there for your reference. All right. So next thing I would like to start off with is, let's see. Okay, so let's start off with the overall view of the focus areas of Budget 2025, right? So to give a starting context of the government's thoughts around this. So if you look at the third Madani budget, which is Budget 2025, there are three key focus areas by the government. So if you read the budget speech, they talk about number one, driving reforms, right? And number two, reinvigorating the economy is about all to do with economic growth, economic development, and what sort of policies and ideas they have to catalyze them. And thirdly is about, and not least, the prospering of the rakyat. And if you can read that, then it says basically addressing things like cost of living, income levels, education, healthcare, and things of that sort. Now, just very quickly running through first line on driving reforms, right? It says areas of focus include, bear in mind, I mean, this is like a snapshot of, a couple of hundred pages of the budget speech. So fiscal responsibility, we are all mindful that, the government that would have introduced that would have talked about this. And one of the main, the elephant in the room really is about subsidies, right? So there was addressed. I think people expect more, and I think we're going to have a bigger discussion on that as well. Petrol subsidies form the largest, RON 95 subsidies, and we have taken back some of the diesel subsidies and so on. But there are areas that certainly, I wouldn't call it low-hanging fruit, but areas that the government definitely needs to look at, and we should look at some of the numbers of those to give a bit of context to that. Expanding the revenue base certainly is an important area to look at. Again, I will have some numbers to show you in some graphs, some colorful stuff. But really the idea is that we need to be able to manage our budget deficits to bring them down. Because, any developing country, I don't think we can continue to have fiscal deficits because it's just boring. Taking opportunities from our future generations in many ways, because you have to service that debt as well. All right. We'll talk about that in a bit more detail. Administrative efficiency. So the government talked a lot about administrative efficiency in terms of, avoiding duplications of things. So one of the things that the government wants to do is merge InvestKL together with MIDA, the functions, which makes sense. One-stop center, that kind of thing. The other thing is that there will be they call it STAR. It's a committee to, sorry, I'm just trying to think about what the, Special Task Force Agency Reform, on Agency Reform, right? STAR, it sounds like Star Trek, I think, but it's not. So yeah, the government is serious about this. They mentioned this, and we would expect the machinery to be moving on, improving administrative efficiency, including things like digitalization and things of that nature. So reinvigorating the economy, some of the main thrusts in this area of focus, the government talked about this new investment incentives framework. Why that's important is that for many, many decades, we've had a product-based type of incentive framework, right? The pioneer status, investment tax allowance, that kind of thing. Now, this new investment incentive framework is meant to come out next year, and it's meant to be, the idea is that it's outcome-based, right? So they will look at foreign investors, they will look at job creations, high-value job, right? Just any job creation. They will look at things like multiplying effect throughout the economy and things of that nature in order to decide whether to grant incentives or not. And of course, because of what we call BEPS 2.0 and all that, global minimum tax, so those dynamics have changed as well. Digitalization, automation, and energy transition, one of the main focus areas within the budget. So, the energy transition agenda is still there. Obviously, there are commitments by the government, and therefore you see policies, things like EV charging equipment and things like that. All of this is driven towards that, those objectives. MSMEs, they are year in, year out a major focus by the government, obviously because, they, I think, employ more than 50% of the labor force and contribute more than 40% of GDP. So it is a significant part of the economy, and every year the government looks at new ways to provide grants, provide a structure and framework to help MSMEs flourish, right? Because they form the backbone of our economy. Like I said, prospering the Rakyat, a lot of the things were relating to addressing cost of living. There's a minimum wage thing, which I'm sure we'll discuss the implications of that, inflationary, non-inflationary, is it a myth or is it a real inflationary issue? All right, so that's the context of the budget, Madani budget, which the government announced. So follow the sleep. Go next slide. Okay, you try this again. Okay. All right. So I know this is a very busy slide just to show some macroeconomic stats. Sorry, that's CPI inflation rate refers to the same thing. So the one thing I really want to focus on, and I've touched on it, is really the budget deficit, which has to be brought down. The Prime Minister mentioned that the target for 2025 is 3.8% of GDP. Note that there needs to be a path to an improved fiscal stance. That is important for various reasons, obviously, because our debt servicing burden will increase over time. It's good we say, yeah, budget deficit is going down, right? But it's still a deficit, right? Which means that our debt continues to go up, right? And if you look at the next slide, interestingly, why is our debt? And don't forget, what is a deficit, right? There are two components to it, right? There's always the revenue side and there's the spending side. So there are two parts to it. It's not always just about expanding tax base. It's also about spending, right? That's where the cut in subsidies and things like that come into the discussion. So if you look at our tax to GDP ratio, so Malaysia, we have a problem. Our tax to GDP ratio is about 12.5% thereabouts. Right? If you look at ASEAN average is 14 on this side, on the right hand side. OECD average, okay, 34%. The OECD countries are very high. They're socialist type programs. But even within Asia Pacific, I think it's circa about 20%. So we are one of the lowest in terms of tax to GDP ratio. Then you ask, how do we, where's the room to increase that, right? So we have direct taxes, we have indirect taxes. So, I mean, we can talk about this afterwards again. GST, I think it's a good thing, right? But it's political, there are political implications and the optics and all that. Something we can talk about a bit more. But I think at some point in time, we have to go to a VAT system. Everybody else in the world has it. And there's a good reason for it. It is an efficient means of collecting taxes, and there is transparency. Administratively, it is it is clear, right? SST, the problem is that you've got cascading effects. You tend to have to then provide a lot of exemptions and things like that, and it's just inefficient, the way the administration of it goes. So this slide, like I said, is very busy, but it just goes to show the main thing is that our tax to GDP ratio is one of the lowest. If you look at GST, it was 3.4% of GDP. And after SST, GST was abolished, you can see there was a sudden drop, right? Collections. And you can manage the optics around GST, and you can, and it's like I said, it's transparent, and you can have different rates for actually different classes of goods. Right? You can give the aid back to your society by various other means. So it can be done. The question is political will and that kind of thing. All right. Next, very quickly, increasing tax revenues. Like I said, we have very little scope, really, if you think about it, from a direct tax point of view, corporate tax, individual tax, how much can you increase? The government is incrementally trying to add things in, which will look at some things like dividend tax and things like that. But you find that it's not really you can't solve the problem with that, right? At the end of the day, it has to be really GST has to be a big part of it. Your reductions in subsidies have to be a big part of it. and it's a combination of those things. All right. And of course, we have CGT being brought in as well, capital gains tax. Now, maybe just very quickly touching on those, for you all who may not be familiar with the tax framework in Malaysia. This CGT does not affect individuals, right? They affect companies. Companies, LLPs, trust vehicles, and cooperative societies. It's a bit more complex than that, and we can talk about it a bit more after this. Okay. This high value goods tax has been deferred. I think there are implementation issues relating to that. But if you actually, you don't even need that really if you had a GST system, right? You just have one system instead of multiple different systems with cascading effects, and then you just put different rates on different types of items. If you want to tax high value goods, just increase the GST rate on flashy cars or whatever it may be. So that there are ways to do that. Okay, talked about subsidies very briefly. I think you may have read in the newspaper some articles recently. I can't remember which minister came and said that out of raw 95, 20 billion ringgit is raw 95 subsidies. If we take it away from the T15, okay, I'll talk about what T15 means. There's a debate around that. But of course, the foreigners, why should a foreigner, who drives a flashy car, our taxpayers' money subsidizing his fuel? So once you take that away, you save 8 billion ringgit, right? So, yeah, and this is interesting. If you look at initially when I look at this, and this came from the Edge publication, you can imagine as a result of the pandemic, the spike in oil prices, Brent crude, I think, went up to $100 per barrel, and then suddenly our subsidies went up like that. Exponential growth in subsidies, and it's gradually coming down. But still, some of these things, once it's there, it's very hard to take away, especially when we have different, administrations come in, the kind of thing. So it's a political issue as well. But, subsidies, we have to have that back, or else we're not on a sustainable path, as we'll discuss. All right. Okay. So with that backdrop, so like I said, the overall thrust of the budget is about expanding revenue base, talking about fiscal responsibility. On the growth side of things, the government is looking at new incentive frameworks for foreign investors and all that. And there will be year in, year out focus on the SMEs and things of that nature. And for the rakyat as a whole, every year there will be a need for the government to provide thoughts as to make sure that the people wage levels are keeping up with exceed inflation and to manage the cost of living. So these things are all part of the government's thinking around this budget. So okay, I'm going to pick a couple of things to talk about in terms of the personal tax side of things, right? One thing you all may have seen in the media. Oh, let me take a step back. Some of the things that I'm showing in the slides, you won't find them in the budget speech, right? So the budget speech will usually give us an idea of the things that the government are going to change in the law in relation to tax matters and things relating to that. But there are also, a few days after the budget, what we'll have is that the RB will have a seminar, right? And in that seminar, a lot of new things are revealed that will come in the finance bill, right? So till today, we have not seen a finance bill. Devil's in the details, all these measures and whatnot. We just have to wait for the finance bill to come out. But there will be things that we know because we've seen the RB slides, and some of these are taken from the RB slides because it will come in the finance bill, but it was not mentioned in the budget. All right. So dividend tax was mentioned in the budget. There was in the appendix, they mentioned something. All I want to say is that I'm not sure if everybody is aware. You may have read the newspaper. I think they touched on it. So it's not the first 100,000 going to be taxed. It's after that, right? It's going to be taxed on the individual. So you can imagine, I'll just throw out some of the issues, as financial planners and people will look at maybe helping high net worth individual with their family planning and whatnot. You also have to think, most wealthy people with, let's say, large types of businesses would have structured their business around multiple intermediate holding companies and things like that, right? So let's say I'm a high net worth individual. I have a family business and I have a holding company. and the holding company holds shares in my operating companies, then the holding company, chances are I won't pay a dividend to myself. I'll just charge expenses, whatnot. Okay, RB, okay, I may be taxed on something at a personal level, fine, but a lot of my expenses are charged to the company. I won't pay myself a dividend, right? So dividends that are paid from my operating companies to the holding company, I'm not going to tax here. You know, all your billionaires, I don't think they pay themselves multi-billion-dollar dividend. They'll pay to the company, right? And then the company will deploy that for other investments, right? So, I mean, so the question is, who's going to, there's a question like, you can debate it, good or bad, how much the government can collect is something that we can talk about, all right? So there's some nuances on this that are not so obvious when you see, oh, it's 2% dividend tax. And the next slide, you find a calculation of that. I won't go through this, but suffice to say that there's a formula of calculating, and basically, if you don't have reliefs and things like that, basically your whole in this example, the whole 90,000 dividend will be taxed at 2%. But because of the reliefs, the way the formula works, you get taxed a little bit less. That's all. So anyway, I'll leave this with you all. You all can take a look at it in your free time. Okay, just very quickly, foreign source income, the government, like I said, capital gains, individuals are not subject to. But foreign source income, yes, you're subject to, right? But there's an exemption given until 2026. Now it's going to be extended until 2036. Again, devil's in the details. You all need to approach, if you all have a lot of this kind of foreign source income and whatnot, and you're thinking of bringing back, speak with your tax advisor, right? Because it's not so simple. There are things to consider, right? Okay, the rest, I won't touch on those. I won't go through the housing loan interest payment for first residential home deductions. I think this has been reported a lot. Tax reliefs, again, it's there for completeness. You all can read it. I won't run through all the tax reliefs because there are plenty. And let's not lose sight of the forest because of the trees. Yeah, EPF, non-citizen workers, that's a controversial issue. Okay, just very quickly on indirect tax. Okay, again, this is widely reported in the media. So the government, like I said, one of the things that is slowly doing, right, is expanding the scope of service, SST. At some point in time, SST may look like GST, but called by a different name, right? You may know it's like stealth behind the scenes, Trojan horse, right? As you expand it, then there is a need to maybe provide input tax credits and things like that as well, which then mimics a GST system. Because again, you can, okay, this particular proposal is meant to catch, what the Prime Minister calls premium goods, salmon and all that, which previously was 0 rated and now 5 and 10. So we'll see more and more of these things, right? Expansion of service tax, again, now they want to expand it to commercial and service transactions between businesses. Again, the government, if this were a GST system, because of the output tax credit system, there wouldn't be a cascading effect. Now, the problem is you're going to start putting a service tax on commercial transactions between businesses, then along the way, the chain, right, the value-added chain, people will need to have to ask for exemptions. Otherwise, you have a cascading effect, right? So then you have to go, every person will need to go to customs to go and ask for exemptions. You can imagine how inefficient that is. How are they going to do this? And we're going to get a bit more clarity. Like I said, we're waiting for guidelines from customs. Excise duty, I'm not going to touch on that. I mean, sugar, sweetened, I think that's been widely reported in the media. Okay, this one is interesting. For those of you who are interested, e-invoicing, right? Yeah, so the one thing I forgot to mention also regarding revenue, expansion of the tax base and all that. So like I said, the government talks about, on the one hand, expanding the revenue base, right? They bring in CGT, they bring in dividend tax. To me, like I said, bringing back GST is the best way to, one of the measures to improve our fiscal situation. We talked about subsidies, e-invoicing, right? Why is e-invoicing important? And I'm sure a lot of you run businesses or have dealings with businesses that are doing e-invoicing, needing to do invoicing because of the different ways of implementation. So e-invoicing it's meant to bring up the hidden economy, right? And there's plenty of historical examples of that from different countries where suddenly, without increasing taxes, the revenue collection increases by 40-50% over a couple of years. So the government is excited because of that, right? And again, e-invoicing will change all our behavior as well. Next time, we go, anything that is tax claimable, unless we need to go and ask for an e-invoice. So one of the problems with e-invoicing is that previously, if you go to the RB, you don't know somebody's tax identification number, the TIN number now, you need to create an e-invoice, right? To generate an e-invoice. You cannot search, right? You can put two parameters in, like your customer's TIN number and let's say a business registration number. It either tells you correct combination or wrong combination. If it's wrong, you don't know why it's wrong. You cannot. And there are problems for businesses doing self-billing and things like that. So going forward, and we're also wondering, like, all this year, why is it so secretive? I think your IC is more crucial, right? With your IC, I can do a lot of things already. So this is not a secret. The RBI acknowledges it now. They have to change the law, and they're going to allow everybody to find out PIN numbers going forward. This is not in the budget speech, but it was in the RD's slides. So watch out for that. Okay, on the corporate tax side, I'm not going to run through this. I mean, there's some accelerated capital allowance for e-invoicing. Okay, there are other corporate income tax incentives for, this is to encourage things like, a part of the ESG thing, right? So things, you pay, for example, remuneration for women returning to work and things like that, paid leave for 12 months for employees who are caring for sick or disabled family members or children. The employer who's paying that can get effectively 150% deduction, 150% deduction for every dollar that they spend on this, right? So it is to encourage that good behavior, and application needs to go to talent law. So we have to wait for some information on talent law. So something to watch out for. Okay, very quickly, RPGT. There are some changes to RPGT. In the past, like she's reminding me, I'm running out of time. In the past, RPGT, in the same year, if you have disposal, if you have one loss, if you have multiple disposals, you can set off losses against profits. But going forward, within a year of assessment, if you have multiple sales, it has to be looked at sequentially, right? You cannot have a loss and take that loss back and deduct gains again earlier in that year. Previously, it was allowed. This is proposed. Why? This is meant to align with capital gains tax as well. And all this will align with, I think my next slide will show it, in the stamp duty self-assessment system, right? So the one thing that we have to bear in mind, self-assessment system is coming for everything. So we have self-assessment for our income tax already. Then next to RPGT is coming, right? It was announced last year. They're coming on the 1st of January 2025. Stamp duty also 1st of January it's a phased implementation now. So you can imagine in any self-assessment system, you all will need to be familiar with how it works, how the system works. And of course, if the government is going to put the assessment, put the onus on you, you can imagine any non-compliance will increase penalties and so on. Right? So to watch out for, right? And there's a phased implementation for different types of instrument. Just bear that in mind. All right. Just very quickly, so some of the interesting things that we bring up because of stamp duty, eventually all documents that require stamping will be on self-assessment. There's record keeping requirements and things like that. And, like income tax, the RB can only go back 5 years because of statute of limitation. Those things will also be brought in for stamp duty as well. Right? Again, penalties will change to make it a bit more, to penalize people a bit more for non-compliance. Okay, stamp duty on assignment of life insurance policy and takaful. We will talk about that a bit more, so I won't touch on that because this is something that is a favorable development for the financial planning industry, right? We'll talk about that a bit more. The stamp duty used to be ad valorem based on the value of the transaction. Now it's going to be fixed. So there's a significant difference, right? But what it covers is something that we can talk about. There's a change in, of course, every time governments increase stamp duty. Unless for love and affection and things like that, father to child, like just now that assignment of life insurance and things like that, that one you get a reduction. Everything else in stamp duty is increasing. So yeah, same thing with lease agreement. So if you want to renew a lease, quickly renew it. Okay. Oh, that's the end. Oh, good timing. All right. I think I pretty much covered all the slides that I wanted to cover. I think the message really, like I said, is, we can discuss this a bit more, the tax landscape, I think, is getting more complicated in this country, right? Tax used to be, I use my firm as an example, EY. We used to be one leg cake, the Chinese say tax. We do everything from corporate tax, individual tax, stamp duty, RPGT, everything. We used to be experts at everything. Now it's impossible, right? Everything is so specialized. Why? The world is getting more complicated because of a lot of cross-border things like global minimum tax. Even stamp duty is getting more and more complicated. And with CGT coming into it, it's all this, the application of it it's something that you really need to talk to advisors about, right? And I can talk about things like, I'll give you one example before I end, right? I think this is useful to know as well. For example, we talk about capital gains taxes. I said individuals not affected, right? But there is a section of the Act, and if you're not a tax practitioner and you're not expert in this, it's not something you would even consider from a planning point of view. So there is a capital gains tax issue if there is a disposal by a company overseas of a foreign company, where the foreign company, not a Malaysian company, a foreign company holds Malaysian property or other companies that have high property value of more than 75%. Right? It's a complicated set of rules. It exists previously under RPGT, what we call RPC shares, right? Real property company shares. Those rules are still there for individuals, but now those concepts are brought into the Income Tax Act and becomes very explicit. And it specifically says that any sale of a foreign company, right? You have a CGT issue to deal with if it holds things like properties and stuff like that. So if you are, let's say, a Malaysian individual, you're a high net worth individual, and you hold Malaysian companies, let's say operating companies in Malaysia that have factories and things like that, and then you structured it in such a way in the past that your holding company is a foreign company. Let's say you put a BVI company, Singapore company, whatever it is to hold Malaysia, and then you've got multiple structures along the way. If there's a sale of that share in the foreign company, it could potentially be subject to Malaysian income tax. It's not intuitive, but it is in the law. Then you have to start looking at, does a tax treaty protect that and things of that nature. So it gets more and more complicated in terms of tax administration and understanding tax matters. So whenever you have things relating to tax planning or family planning or asset planning, succession planning and all those things, seek advice from your tax advisors because you don't know what you don't know, right? Okay, with that, thank you very much, and I think we can have a further discussion on some of these things afterwards. Thank you.
Thank you, Mr. Wong, for the very clear and insightful summary of the budget. Now that we have a good overview, let's move on to our panel discussion. We are glad to have a great panel with us today. The discussion will be moderated by Mr. Nicholas Chu, founder of Maxwell Solutions in Europe. Mr. Chu is a financial planning representative with PwC since 2008 and a certified financial planner and Islamic financial planner certificate. As a leader in financial education, Nicholas has guided Maxwell to become one of the largest CFP education providers in Malaysia, serving over 1,500 students. He has also written 7 financial planning books, including Boss Financial Planning and Retirement Chips. Mr. Chu also frequently shares his expertise as a columnist in leading newspapers and as a guest on radio and television. Let me also introduce our panelists. The first one is Mr. Mohammad Siddiq, a renowned macroeconomic expert with deep expertise in labor market dynamics, monetary and fiscal policy, and trade. He regularly contributes to economic insights and positive surveys by the Japan Center for Economic Research and Bloomberg's Malaysia Economic Forecast. Mr. Sedek is also an expert fellow at the Asian Financial Cooperation Association, the think tank for China's Ministry of Foreign Affairs, and has served as president of the Young Global Economic Society and Massachusetts. Please give a hand to Mr. Mohammad. Next, we have Ms. Pauline Yong, a certified financial planner, professional and licensed financial advisor with over 25 years of experience in economics, finance, and banking. Pauline began her career as a research analyst and is now a lecturer, as well as a course facilitator for FPAM's CE program since 2017. She is also the author of 5 books on investment and financial planning and regularly contributes to various magazines and newspapers. Pauline is also a frequent commentator on stock market outlook for City Plus FM. Please welcome Mr. Pauline Yong. Lastly, we have our panelist, Wan Helwa Sohni, a licensed financial planner and a financial advisor with certifications in holistic financial planning and Islamic financial planning. With 13 years of experience in corporate roles in Ernst & Young and Petronas, Helwa brings a wealth of knowledge to the financial services industry. She is passionate in advocating for empowering women in personal wealth management and has spoken at numerous financial awareness events. Please welcome Wan Helwa.
Thank you for today, the MC, and good morning to everyone. I'm Nicholas Chu here. Just now, I think Mr. Wong gave a very good presentations and quite comprehensive also. Okay, so today actually our target audience, we are focused more on the CFP professional. So for financial planner, CFP professional actually is mostly we do financial plan. So financial plan actually we try to do something is pre-planning. So when we talk about planning, we always talk about you need to have an insightful these information. Okay, so then you know what is hindsight. Okay, in this insightful thing, then also we can plan something foresight what we should do in the futures. Okay, so today our discussion also based on this budget. Just now I think Mr. Wong did quite good analysis on this budget 2025. So it's quite insightful information that we have. Then we try to be discussed later. It's about what is the hindsight that maybe we have to aware also. Then also for the public, when we talk about planning, what we should be focused, which area that we have to really have to be zoom into it and really to understand what is the challenges in the futures also. Okay. Before I start, I think I also have do a very simple PPT, just 3 PPT only. This PPT also just very fundamentals about what is the budget 2025. We'll talk about the budget like financial planner. We always talk to our client is before we want to analyze or give any advice, we have to know what is the financial status of a client. Correct? So for the government also same thing also. Look at the government actually it's quite simple. These 3 slides. I think first slide actually we talk about this so-called income. Okay, the income of this government. We can see that this year we still continue with the deficit budget. Okay, continue the deficit, but we already reduced. I didn't reduce. I think the reduce, as I know, actually is very welcome for especially foreign investor because they like a government that committed to reduce. Okay, the deficit. Okay, so how they reduce? I think on the subsidies. Okay, but in terms of the income, I think just now Mr. Wong did mention also. It seems like widening the tax because just now I think Mr. Wong sharing that. On the GDP, we are 12% plus. Compared to the region's country, we are the lower tax based on this GDP, the percentage. Okay, so widening the tax is one of the challenges for the government. Previously, we implement the GST, but now actually the GST is no more. Now we try to use SST, okay, to expand the scope of the SST. Okay, it looks like whether it's good or not later the panelists maybe can share. Okay, then we look at the second I think I want to discuss in the second, the PPT, we talk about the expenditures. We'll talk about the expenditure, I think, can we, the second slide. Okay, we'll talk about the expenditures. I think got two things I want to highlight also. One, actually, we're talking about this government's salary. We pay the salary. I think it's about 100 over billion. Plus, if let's say the retirement charge is about 400 billion. So I think both actually is about 40 over percent. Okay, that means if you run a company, so about 40% is paid to the salary part. Then another one I think maybe we can highlight actually is about our debt service charges is about 16.3%. That means it's in similar also in the family. If let's say you got 16.4% pay the interest in the finance cost, whether this is healthy or not, maybe we can discuss a bit also. Then last I think is about the subsidies. I think 15.7%. If you look at this statistic, it looks like government they can zoom into it where they can reduce. Seems like subsidy is one of the main area that they look into. Okay. Then about the government service salary, all these things, I think maybe it's a big challenge also. Okay. Next, we talk about the developments, these expenditures. Next. On this development expenditure, we can see that actually development expenditures is quite important, especially for Malaysia as a development country. Because it seems like a lot of, we talk about business or something. If you are just a new company, so you need to put more, we call it CapEx, these developments to expand your company or to invest in technology or whatever the thing. So Malaysia, we still within the 20%, this percentage in this developments, so-called expenditures. So based on these three PPTs, so I just want to push my very first question to all the panelists. So I think first is I just want to ask all the panelists first. How would you rate this budget from 1 to 10? Is it 10 or not? Each of you maybe just tell us first before we really start, so we know that what is your view on this. Can we start with someone first? Very simple one. Very challenging.
I will give it a 7.
No bad. 7 is like A.
7 in the sense that, like I said, I think the recognition of fiscal responsibility is important. Without recognizing what you need to do and not recognizing there's a problem, then we can reach a stage where there's no turning back. I think we want to avoid that. But again, I thought we could do more in terms of subsidy rationalization. But there's something more to come up with over the next few months. That's a personal view. But like I said, I give the government a 7 for the world.
Very good. Not bad. How about Jason?
I'm not sure whether it's too much or not, but I can say it's from the 10. I need to minus 1 because the delivery in terms of the communication is not so clear, especially when the Anwar had been mentioned during the budget. Because he used the quite I can say it's a very Sanskrit and also let's say English that the Sastra kind of the Malay is very tough for us to digest. And second, so that's a minus 1 point. Minus another 1 point is more on the very surface. Budget is always been surface during the table, but if compared to the past 5 years, this round budget is a much more surface. Of course, the one thing that they highlight is about the fiscal responsibility, and also they not really talk about the for the first time government talk about the Petronas subsidy. Petronas dividend, sorry. So that I can say this is the surface is need to minus 1 point, and then I need to minus another 0.5 point because it's not really like a comprehensive to the business, and also there's a community. It's more focused on the community, but if let's say you ask the community, the people on the street, they don't understand. So that's why I can say it's about 7.5.
Oh, not bad. So okay, good. Okay,
Okay, for me, I think I'll give a 7 out of 10. The reason is because I find that this budget is people friendly. Basically, they take care of the people's low income basic needs in terms of the infrastructure, a lot of maintenance, and then to subsidize them, tax rich and then subsidize the poor. Then the 3 points that not in the picture is because number one is the minimum wage. I think this minimum wage of 1,700 ringgit, which will put Malaysia as the highest minimum wage among the ASEAN countries, and which is a negative point. And then number 2 is the subsidies for the 95 RON, because the execution part and also the classification, that one is a bit of a problem, because currently when I see that the petrol is about 2 ringgit per liter, which is one of the lowest in the world. We are actually lower than some of the oil producing countries like Saudi Arabia and Russia. So which means that there are actually some room for us to go in terms of this taking away the subsidies, which means that we do not need to take 100%, but then take a little bit, but across everybody. Not like student group, because execution can be a problem. So yeah, that's
Very good, thanks.
To me, it's more between 7 to 8 on the higher side. Why is it so? Personally, because of the budget allocation set between the targeted groups. So you reallocate certain, incentive, certain group, but at the same time, you help the country for them to prosper the development, the one that's more sustainable for the future. Okay, so that one, but I want to just add on, if we want to put a perspective of maybe the society out there, they could be not understanding this so much. So it could be a more like between 6 and 7 kind of ratio, right? Because what they will take into account is all the negative part, that I lose my subsidy, I have to take care of a lot of things, problems kind of thing. That's
Very good, very good. I think seem like all the even myself also, I think that they also some asking me also how you read this. I ask you the same question.
Yeah.
I also read about sales, but what I'm trying to say actually, previously a lot of time in the budget we will talk about like more on the subsidy thing or this sort of thing. But this now we seem like not only talk about subsidy, we also in terms of the tech care, not only B40, we also in terms of M40 also. This budget seems like we already have take care about the M40 side also. Okay, so also in terms of this the physical deficit also we try to reduce. So this is my view. But anyway, maybe if let's say maybe each of panelists also can share about something that you think that just now I think you also need sharing something. But anyway, can you share up to maybe 3 key takeaways you think that this budget is something that is very good, or something that you want to share on this topic? You think it's very important that maybe.
So basically, there's the 3 key things that I would like to highlight. The one that's totally different. First is on the minimum wage, 17. Sounds like controversial, but like I said, it's if government not do, when? That's the main questions. And I know this is, we talk about the we give impact to the cost of the operating and cost of the labor. Maybe that's a later I can explain in details on how it's actually not really give the impact to the Malaysia economy. And the second thing that I would like to highlight here from the budget 2025 is more on the planning of the government to achieve the budget deficit, where it's very clear cut, where it's a show high possibility for the second half year next year, around 95, it's no longer subsidy. Maybe there's targeted subsidy. Of course, we talk about the T15, we talk about how the PADU, or now it seems like no need to use PADU. So that's things. And then lastly, more on the talent. The talent is a much more on focus the current trend, which is good, but don't forget that if let's say you allocate the budget for the university, because let's say one lecturer here is a graduate, someone graduate the next 3 years. Is it that the skills still usable for that time?
Okay.
So that's the three key highlights.
So it means something like AI is this
Yeah.
type of thing should be so-called trend for the like universities, these are people. Okay, good. How about public?
So just now I've mentioned two things already, which is minimum wage and also the raw 95. So one more thing that I want to add on is the ESG, because this budget has actually bring about the environmental issue, and then the carbon reduction of the carbon tax, which is I think is a positive move, and which bring us to it's a good reputation for Malaysia as well in terms of
Yeah, this some ESG seem like not really a lot. Okay, maybe on the last budget already so-called there were out some policies, something inside the last budget. How about it?
Okay, straightforward, the tax relief, self-extension and revision, that's really good because that's directly impacted many people out there. And then the allocation to particularly for health and so education, I'm very strong advocate about that. People us, because it's us, you know, it's not other people, it's part of us. All right. So that's something that really I think good and very important. And as well as for example, like okay, within my practice, the stamp duty thing it's really solved quite a bit of no problem there on the estate planning kind of insurance.
How about Mr. Wong?
I think I probably alluded to a few times that the subsidies part is but one of the things that was mentioned, I mean, I'm talking from the, what is important is to make sure that, you know, the development areas, it's not just focusing on the cities, it's not just focusing on KL, it's like more Penang, Johor. So there is also it was mentioned in the budget as well, that there will be more incentives given for developed industrial areas, you know, in less developed places. I think it's mentioned previously in other budgets as well, but it was brought to the fore in this budget as well. So that's something that was important, I think, that the government recognizes that it has to be widespread development across the country, and no one's left behind. And lastly, again, I mean, there's so many things in there. I've touched on quite a number of them. So I'm just trying to find one thing. Third thing. So we talked about subsidies, we talked about inclusive development. And lastly, I think it's just the overall theme that, prosper the rakyat, make sure that the government is taking care of people.
Seems like all is more positive signs. Okay, very good. Before I continue, if for the online participants, if you have any questions, you can leave this question in the Q&A the sections. So then, so I will see. I will from this laptop to monitor. Okay, to monitor from the Zoom to monitor your question as well. So okay. So before we move to next so-called sections, but I think very important we want to talk about a little bit about macro view. Macro view. I think macro view got two. One actually is as mentioned in this budget. The projected GDP growth will be 4.5% to 5.5%. Okay, then this one is the government's projected one. But since yesterday also, US just have this US presidential elections. So I think US is very important in this. You talk about capital market. Okay, they are very in terms of the currency, in terms of the interest, in terms of a lot of things, in terms of the trade, also international trade. So they consider is leaders in the world. So I think since we talk about the macro view, I think maybe also get the panelists to share about based on this budget, how you view on the coming this 2025. Okay, so this is very important for the investment planning on this other thing. So it's very important for you for the next year this planning. So shall I start with Jehel?
Okay. When we talk about the outlook for 2025 on the investment, so basically that the first thing that I can say that the 2025 is not as easy in terms of to maneuver the capital markets, and I can say that in terms of the whether the index has been doing well for the next year, I can say yes, it's been like high. probability for the index to be doing well. But back to the question and back to the yesterday event, which is the US elections, and also there's the Trump won the elections, how it will be give the impact or how it will be change the landscape, the macroeconomic landscape in the Malaysia especially, and also there's in the region. So what I can say that when we look on the Trump's and the list of the I can say there's a tentative cabinets, we see that it will be a pro-business and will be a pro-economics, and because that's the first mandate that the president need to prove to all the people, to all Americans, is how the president can reduce the debt, the government debt, because we know that the government debt will be a very high, big compared to the rest. And second, that we see that in terms of the in order to achieve this government debt, to reduce the government debt, the government needs to have a strong revenue and also reduce the expenses. And I can say that in terms of the expenses, it will be less effect on the Obamacare policy, which is I can say of course, we as an external foreigner, so we're not going to experience anything about the Obamacare, but I can say that it will be give more benefit to the pharmaceutical company, and also that when we talk about how the government can reduce the debt, it's also from the government revenue to increase the government revenue. And what area that I can say that in terms of the tax, it will be less maintained. It's not going to because a lot of people think government revenue is come to the tax, but government revenue also if let's say the company increase the production, increase the productivity, the tax still higher. The tax is still growing because the percentage is the same, but the amount it will be increase because due to the government company revenue. So I say that this will be give a spillover because you need to remember Trump for this year very advocate on the small medium enterprise, small cap company, and also advocate for the graduates to set up their own business. And this will be a spillover to all the emerging market. Why? Because we are the producer. It's not about the Malaysia, but we also talk about the India and also Vietnam, where we are the producer of the items that's used by the global. I'm not see so much on the the geopolitical tension between US and also China. The reason why, because it's already factored in for the past 9 years, 10 years, because since the past three president is already talk about the China trade war, and all the business already shift their direction, their business operations outside the China. So I can say that you will be surprised that for the first 2 years, the pressure on the China will be lesser. It's more on the try to do on the domestic. What can the domestic industry can be flourish? Then I can say that Malaysia, a new industry that we develop can help us to first mitigate the geopolitical crisis, and second can mitigate can lead us as a developed nation, because when we talk about the new industry, the data center, I'm not sure how many in this group or online aware that Malaysia is the highest submarine cables in the we have a 25 submarine cable. We have a 6 leading stations, and this is a connectivity. And this is the reason why a lot of people don't do the
shop of connectivity.
Yes, correct.
Okay.
So this is maybe a benefit, and someone that's on the Malaysia as an ASEAN chairmanship. We get the upper hand to receive the new inflows from the foreign investor, and I can say that the main attract will be North America, which is US and also Canada.
So very good. So David, you covered quite a lot. I think it's very good. It's more on the positive on the next year, especially on the Malaysia. So how about the GDP? You agree with the government? I've been viral I think I've been viral on the February when I'm talked to the live show in the Sinar Harian in the February when I said that ringgit will be touch 4 ringgit and 25 cents, which is already touched. So I received about 1,000 comment. Luckily I don't have the Facebook, but I can say that what I can say that in terms of the GDP,
we are the first in the UOB again. I'm responsible to come up with the forecast for the Japan Center of Economic Research, and also that's a Bloomberg. My forecast will be like a 5% in the second quarter for the overall year, but I increased it to the 5.3 during the submission on the August. In the August submission to all the submission to Bloomberg, because it's a Bloomberg call all the economists to provide their forecast on the same day. So we need to provide our data, and I'm the highest, which is a 5.3, and I can see it can be achieved at the 5.3. However, we see that this 5.3 is derived by the lower base last year. And secondly, that's when we talk about the ringgit, I can say that the ringgit will be like a trade around 430 to 425 this year, and next year it will be like around 410, and I don't think it will be like touch on the 10 or below 4 ringgits. So I can say that the positive impact that we can see in Malaysia, especially those all the financial planner, look on your Malaysia small cap, look on your Malaysia mid cap as this is maybe like the main driver. Why? Because when we talk about the data center supply chain, the circular is a much more heavy to the small medium company.
I think Saturday is quite excited about this. So that's why some organ request slow down. It's okay. So I think I can feel that because it's quite excitement on all the data that we have. Okay. So I think maybe one thing also before I pass to another panelist. So in the next year, just mentioned about the currency. Yeah. So Malaysia currencies, what is the next year you focus? Okay.
Normally, we only focus for the 3 years, maximum 3 years. But on the first year, of course, we look on the quarterly basis. On the second year, it only annual. So for this year, we look about 4.25 to 4.35, 4.30. That's the range. And then the next year, we look around 4.50 or 4.10. Then in the 2026, we look around 4 times, maybe will be 410 or 4.05. So I don't see that our ringgit strong enough to strengthen below 4 ringgit. But I can say that the ringgit strengthen is not because of who become the prime minister, but what is the policy, but also how the ringgit interconnect and how dynamic the ringgit in the trade.
I always heard this economists tell me actually our ringgit currency actually is depend on the capital market. The demand of the capital market actually is not more on the politics side. Okay, so this is a different view. So I think this is very important. So next year when we talk about the investments, how you go and hedge the currency, whether you need to hedge the currency or not, all this is very important. I think maybe Pauline on top of just Jen.
Yeah. About the forecast about the GDP 4.5 to 5.5. Okay. For me, I think there are 50% chance to this target. The reason being is that we are in the ASEAN. Okay. And then if you will look at the foreign direct investment flowing into the ASEAN, when I look at the 2023 figures, out of the 240 billion, Singapore is number 1, which accounts for 70%. Number 2 is Indonesia, which accounts for a total of about 22 billion USD dollars. And then number 3 is Vietnam, and Malaysia is number 4. Okay, so when I look at this ranking, I see that Malaysia actually has the potential to move up to maybe the 2nd position in terms of the FDI flowing to the ASEAN country. So for that reason, I would think that next year perhaps there will be more FDI coming to Malaysia, and then that will boost our GDP. And for the other 50%, why I think that it may not reach is because for one is the minimum wage. Because the minimum wage, if I to rank across ASEAN country and also include China, 1,700 ringgit is on par with Shanghai, which is the most expensive city in China. And so if you to compare to Jakarta is 1,500 ringgit, and which is the same as us currently. And if you to compare to Thailand, which is 1,350 ringgit per month, and Vietnam is below 1,000 ringgit. So if you were to compare, if let's say there are the FDI are coming to ASEAN countries and then they are looking at which country to put their money in, they will probably, there are a lot of factors. It could be the resources, we are abundant of resources, and then we have the skills, the talents and everything. But it could be the cost of, because manufacturing sectors, they require a lot of labor. So maybe the cost of these wages is also part of the consideration. So maybe it's this, they may deter some of the potential manufacturing sectors that come into Malaysia. And also another part is the inflation worry because of the non-95 subsidies being removed. So I think maybe that may cause some inflation pressure and which may erode into the GDP.
Since we cover about this GDP and talk about a macro view on the economy, I think I just add on a little bit okay? Because we don't want to talk about too much about the market thing on the next year, but we add on a little bit. What is the share that you think the KLCI? So we think the next year actually is more toward is more toward bullish side or
okay, so I think next year will not see as what you see this year, where you see some of the sectors you have 2 times, 3 times of price increase, appreciation. Next year is more like stable, and I'm looking at the market will tend to be steady, but then will be moving on a slower flow.
How about
Okay, basically that if let's say you ask me what the sector because whenever there's a media also asking me, I'm not going to let's become the marketing for their company. So I will talk about the next which sector only. Sector that I'm look is more on the like the constructions, property. That's one. That's 2 things, and then there's a second. The third is the utilities. That's a WB, and then there's a 4 is a logistics, and then there's a 5 is on the telecommunications.
Okay, good. I think there's a lot of the.
But utility and one lah.
They also add some dividend stocks like banking and REITs. Because if let's say next year the growth is slower, maybe they can put their money in some stocks where they can have some stability, peace of mind.
Okay, very good. See, you already talked about the dividend. We continue our actually in our this plan. Actually, we want to talk about the dividend tax. Okay, so since you just mentioned about GDP, now we try to recover on the investment side also. Maybe Mr. Wong can add what is your view in terms of the GDP plus this dividend tax. That's all I think you did mention. Okay, about this 2% tax on the dividend. You think that this is will be impact to the high net worth, or totally doesn't mention about that can be in the part of the dividend just in the corporate side?
Yeah, I think it's 2 things. Number one, the dividend tax is supposed to affect foreigners as well. So you could ask the question: if this is an area to be looked at, how are you going to enforce it? Because there's no withholding mechanism. Right, so if you force the foreigner to file a tax return on the dividend income, that also doesn't make sense. So that's the question
on that, something
at
like
the moment, right? So there's something space to watch out for. Whether or not it's going to deter people. Again, if you back of envelope calculation, right? Let's take a look on the one side who it affects. I mean, if I were working throughout my life to save up money to invest my money, and I created this nest egg to invest because I would have retired and then I would rely on, let's say, dividend income for my expenses and all that. Now, again, the first 100,000 dividend is exempt, right? So, it's only above that. So the question is, first of all, how much dividends you need in order to reach that threshold, right? How much investment
to be
amount first? I mean, what's the average dividend yield on KLSE? Probably about 3.5% average dividend, unless you put everything in banking stocks. I mean, so that works out to be maybe about what, 3-4 million, in order to hit that target. So in reality, it may not be a big impact. In fact, it may not be the driving force of whether I'm going to invest or not. But I think taking a step back, but in reality, if you look at the global markets, it's only the US market is really performing. The US, the top performing companies are, they are tech heavy and therefore, they command valuations. The rest of the world really,
But But based on my understanding, because they're saying that this one also will be this imposed on the Sangriang Mahat when they declare the dividend also, right?
Correct.
So this
Correct.
will affect the.
Yeah, so, yes, correct. So to what extent that will change behavior, it's hard to say. Right? But what I'm saying is that, again, for a lot of, the example I gave just now earlier, if I'm a real high net worth individual and I have multiple businesses and whatnot, most of the time I don't pay myself a dividend.
Yeah. But for SME owners?
Yeah, for SME owner, same thing. I mean, if you have a holding company there, you maybe a whole SME owner, you generally may not pay yourself so much dividends anyway. You will charge things to the company, and so there are ways. And like I say, if you're an intermediate holding company where you just use this as a planning tool, you don't actually even pay the 2% dividend tax. So there are multiple angles to this stuff, right?
I think depend on the which group let's say the SIB there they earn about maybe 600,000, and previously they were planning something like 70% corporate tax. Now after you pay the corporate tax, you declare the dividend to the shareholders. Then it's another.
But the other thing is, some people say, I mean, if that's the case, then I will. If some people say, okay, I'm not drawing a salary, right? And then you're going to tax me on my company profits, and then you tax me on dividend now. Then you should pay yourself a salary. In fact, from a planning point of view, that also makes sense. Because your salary that you receive, you get taxed at graduated rates, which is below 24% to start with, right? Let's say, right? You can, depending on how much you pay yourself. But then the company, assuming that it's an operating company, can get a tax deduction anyway, right? So, the ways to plan around it.
So that's why you need a tax planner, tax agents or tax consultant, or also a financial planner to help you do a little bit pre-planning.
Can I comment on that? I'm very excited because I think when the budget was tabled during that Friday, right? One of the biggest response I received is from my business owner client, the SMEs, that they start to react. And Helmut got this 2%. At that time, you don't yet calculate, you don't know how much exactly, but it shaped your, the feeling of these people. Because yes, by practice for the SME, most of the time the tax planning is really, I don't know, that's really a big thing to them. We really talk about how much salary, is it salary or bonus, or is it dividend? Because I'm talking about the business owner that normally plan to take their take-home pay via dividend. So, but that was during the announcement itself. But I follow up, with these people 2 weeks after the budget. I said, can I just have your view again? How are you feeling about it? Then he said, is it important how I feel? I just want to know your view. What is it to your company and to your planning? What is it? Because definitely it's something that you will do and takes time. But what is it at least today, 2 weeks after the budget announced? Then he said that those people are quite similar answers, saying that actually we don't mind paying that. We've been a very good taxpayer anyway. But what is it for us as a business owner? You see, things become a little bit wider rather than very zoomed into that particular, instance. So it's people like, hey, what can I get as a business owner?
Yes.
That is more, I think, important to them when they start to respond accordingly. So as financial planner, normally, because we don't want to talk about things that we cannot control.
Yes.
But what is the thing that we can control? So for example, if this client work in this business that have some grants available. So most important is the transfer of information that you need to be aware. In the business level also you have some benefit. But this benefit doesn't come to you just directly like that. You have to go and fact find and see what's the method. A lot of things still not yet clear. But then relax, we will address that. Something like that.
Very good. Yeah, so instead of complaint, we have to look for the.
I think we have to allow that
Yes.
space, we have to allow that space.
Yes. I think one question is
I'm not from government or from politician or like things. But let's look on the how the 2% dividend tax imports and how it will be impact to the industry and also the stock market especially. And we look on the company may revisit their dividend policy. That's the most likely they will look on the dividend policy. And just now, Mr. Wong and also Hufni already mentioned about that this more money will be in the company, and also we know that the business owner are the good pay good tax paymaster. Then this is a way that the government try to provide the indirect support to the company, because that's when you revisit back your tax policy, you will see that you will try to maintain the revenue into the cash holding or for the business developments, and this will be help to improve or increase your productivity. And also this for the Sdn Bhd or Berhad. Both is a give a benefit. For the Sdn Bhd, it will be increase your products, your production, your productivity, and also increase the market share. But for the Berhad, which is the public listed company, it also increase in terms of the I can say liquidity, not just the liquidity, but also why I say it's liquidity, because the cash money will be transferred to the either a saving or placed to the bond market or placed to the any capital market. So we can see that if let's say the company already have a excessive cash in the saving, they will transfer to the money market. So it will be a benefit for all the financial planner. You can pitch for the money market, you can pitch for the fixed income, because we see I don't think the government bond will be reduced. So it will be still maintained in terms of the attractive yield. And also for the financial planner update, you can do on your funds, your local Malaysia mutual fund. Why I say so? Because the listed company will able to generate or improve their business twofold from this kind of the revisit dividend policy. So this kind of the improvement will be impact on the pricing valuation of the company. So we know that we have a Khazanah, FPAM, everyone. We also have a private investor, which is you and me, everything. So there's when we look on the stock market, that's the one area that people will be invest. And for the Malaysia government, it's already very clear directions. Anwar and also the MOF team already instruct all the GLIC to focus, invest in the local capital. So it will be a boost in terms of the market performance. And I'm not talking about the market performance, I talk about the liquidity, because in Malaysia we are very, I can say we don't have huge liquidity. That's why if let's say US kena or China kena, we also kena. Because that's the liquidity issue that we have. We also don't have the huge investor base. So with this thing, it will be help, but it's only one side. Another one side, I can say later we can talk about the minimum wage, because I'm still optimist about minimum wage, and I don't see a huge negative impact will be applied.
Later we'll talk about minimum wages related to the inflation. Let us continue, because just now just said sharing the why is very good. I think we can continue discuss a little bit. Let us continue on this area is about, because this tax is on the dividend. So if what happened to the mutual fund? Mutual fund, they receive the dividend, it's not tax, correct? So actually, I want to pose a question to the foreign. Is it good for the unit trust company? Whereby that because we invest through the unit trust, then the dividend they receive under these fund houses, so the unit holder when they receive the end of the return, actually is not affected on this tax.
Actually, for if let's say for the investor's point of view, in order to get that above 100,000 on the dividend, you must have a lot of high net worth clients. So which means that if you are high net worth, because effectively when you convert, maybe it's less than 2%. So it may not mean too much to you because you are very high net worth. So I don't think it will matter.
So high net worth, normally they're looking for the actual ROI, so the net ROI. Okay. So another thing is, since we discussed this, your government also this after the budget they highlight about T15. Last time we only got B40, M40, then T20. Now so called got the T15. So based on my understanding is that government try to be look into the T15, want to tax more on this group of the paper. So that's why some people say that why we have a more capital gain tax. Previously, actually, we don't have capital gain tax. Now we like this tax on the dividends. We tax even like estate duty. Because estate duty, a lot of people they predict will table out also this budget, but it's not really. So maybe on this, because we just discussed on this topic about the capital gain and also on this T15. What is your view generally? What you look at this area? What is your view?
I think first of all, it's interesting, this estate tax, estate duty thing, right? You see, people came up with this. Actually, I was looking back at where was it originating? People who mentioned it first, then it became viral. Actually, it's only one person. There was a lecturer, I think, I cannot remember which university, who mentioned it. And somehow it took a life of its own because it became a very popular story, right? And everybody just harped on it. But there's no truth to that. Even Dato Johan Berikat was Secretary General of Treasury. He also mentioned it. So, yeah, see how viral goes, right?
Yeah.
So even his ministers were asking him, I say UK, is no way. So let's put it out there. It's scary, social media. What was your other question? Sorry.
So,
yeah.
thanks on the so-called the capital gain.
Yeah, so there is, okay, so again, capital gains at the moment, again, it doesn't affect individual capital gains tax, right? So that's important to bear in mind, because otherwise the law gets so complex that everybody thinks, hey, does it affect me? It doesn't affect individuals. It affects sale of private company shares by companies, trusts, cooperative societies, and limited liability partnerships. Just these four categories.
So, but what I'm trying to ask, whether we extend the
yeah, so right now there is no reason to, or no, I don't see the government doing that. But then again, I think the government has said at various points in time that there's no intention to do it. So we'll take their word for it, time being. I don't think they want to rock the boat in that shot. Okay. Because like I said, to what extent that will be a negative driver for investment and things like that is an unknown factor. And you've got better lower hanging fruits, which is the indirect tax part of it, which is things like GST, expansion of SST. So that's one way.
Okay. How about
Well, because I think that in fact the government wants to encourage the capital market. Our capital market is actually very weak. So if we were to introduce this capital gain tax, it will definitely select the point for our some of the capital. So I don't think the government will. As for the asset duty tax, asset tax, it was once abolished in 1999. So there's no reason why we want to reintroduce, because there must be a reason why it was abolished. Definitely there was ineffective tax collection of tax and then other issues. So I don't see why we want to reintroduce the asset tax again.
Just again, a bit from practice and most people out there, we talk about T15, I mean, all this goes viral and become very sensitive. But my only words as a financial planner to myself and many of us here, what we should be focusing on is not the income alone, but it's actually the consumption. Because that is more important when we want to address this inflation and whatever the effect out of this budget.
Okay, good. I think you got one question asked about the threshold dividend credited 100,000. Does it include dividend from REIT after the 10% withholding tax?
No, I mean, because a REIT is a trust distribution.
Okay, no, so the answer is no. Okay, so another question is, so for company many holding real estate and real property company share, does the CGT budget 2024 replace the RPGT?
So the previous, okay, so the CGT that came into effect replaced RPGT for the RPC thing. It's a very technical question. It's meant to replace that, but for individuals, the concept of if you own private companies that has hold a lot of real property and things like that, RPGT would still be a relevant thing to consider. That hasn't been taken.
Okay. This very
technical formula.
You are okay. So okay, now let's continue. We want to talk about the inflation. Okay, so next year, because this year we talk about inflation, a lot of people really, you can see. I think after the MCO, we can see post MCO. We can see dairy, our expenses, our food, everything is really going up a lot. In Malaysia, I think like chicken rice, last time we have 3 ringgit one. Now Malacca you can see 6, 7 already. 6 or 7, you go Penang also same thing also. 6, 7 ringgit already. Okay, a pair of chicken rice. Okay, so what I'm trying to say is, so what is the next year? And someone now we talk about the minimum wages going to increase to 1,700. 1,700. All this so-called affected our inflation rate. Since this year, actually on the last quarter also, we have very good government control. The inflation is about 2 something. So anyone maybe want to share what's okay?
Okay, I think either because of the minimum wages revision, inflation will be there and always on the moving trend. That is what we know and what we experienced from the past, obviously. Right? So I think what is more important here? I mean, of course, everything but is domino effect, but the thing that we are discussing here is things get more pricey.
Yes.
What is cheap, what is expensive is very generic, when you talk to everybody will have different definition. But somehow it will affect our lifestyle
Yes.
to some extent. Whether major or not, that's why I just now I mentioned about consumption. I think that is more important for us to focus on. Because we cannot make it generic, the same thing that applies to everybody. If, for example, this targeted subsidy on the petrol, it will impact those people, traveling a lot. So that could be one of the line items in your cash flow that have significant impact, right? So the way for me to address this is really to now sit down and look at our current expenses. We should know where are we now and how much between our line item is the one that it could be in terms of either significant in terms of numbers, or it also can be in terms of, sometimes, life is like we have so many things that we want, but we feel that we have very minimal resources. That's always the feeling, regardless your income level. Trust me, I mean,
Some people say, I only got 1,700 minimum wages.
That's what, if the wages is very minimal, that's what the issue there is not about expenses or expenditure, it's very much income level.
Yes.
We cannot rojak, no?
Yeah.
If the issue is income, then we talk about all the benefit in terms of how can you have, other source of income within whatever resources that are available to you.
So,
In regard, especially during MCO, we've been like people that really put out there to really talk to the community, like how to help housewives. But there's still options. If things has to be done in more, society punya effort lah. Bukan one person kind of thing. So that is very important. So know where are you now and what matters to you. That is exactly that you need to do now.
yeah, give some good advice.
Just add to that, I think this is one thing the government has been mentioning. I think it's quite intuitive as well. And the whole question of affordability and whatnot varies depending on whether you're in the city,
Yes.
whether you're outside. And I think that's something that you cannot put the same brush on P50 means like that across the country, right? So that makes it even more difficult, right? The affordability of petrol, that's why the subsidies and things like that come into question, how they targeted subsidies.
If we say that food
cost of
prices
living.
will go up, really up, we can't just simply like from, I
Correct.
don't like cooking, now I can cook because I don't have enough money. Mentally, we have to take care of ourselves.
Yeah.
That's something to be addressed, not only to very zoom into that, because at the end of the day, you want to be something.
So how about your view on the inflation rate on the next year?
In our calculation, it always has to be allocated for that. Then we have this. We have to put that. If suddenly it does not really go that way, that's a buffer for you to enjoy. You should enjoy life.
Yeah, looking at the minimum wage and as well as the removal of subsidies, I think inflation is here to stay. But the thing is that the whole is having inflation, not only Malaysia. But the thing, we are actually much better than neighboring countries, especially Singapore, Indonesia, and others. That's because our government has some subsidized items. So now, if we were to remove the subsidized item like the non-95, I think that could be causing to people trying to cope with the problem of inflation. And then in order to cope that, like what Carol said, is that you need to think of how to get extra income. Think of ways to try to mitigate the impact of inflation.
Okay, I think you just now about the GDP, you're quite positive on the next year. So how about the
Okay, I see that the inflation will be increased for the next year, and I see that the inflation will be at the range of the 2.4 to 2.5, which is an increase of 0.4 for the next year. But let me connect all the points together. Helwa said that the issue is a minimum the income. So that's why the government come up with the minimum wage. Yes, that's a just now also there's a both panelists, including Mr. Wong, said that we cannot put everything in the same. When we talk about the inflation, outside, urban, rural is a different city, and also there's a in the what we call it, Kelantan, Terengganu also different. Then there's a we look on the what's the best that the government can do. Why I say that the minimum wage is not really create the inflation. It's not going to push up the inflation. 1,700, which is an increase for the, let's say you are the business owner, your labor cost will be pushed up, which is about 13%. But we need to know that when government highlight about the minimum wage, they also highlight first that if let's say that you have the foreign worker, you also need to contribute to the EPM. Also another labor cost for the business. So that's we look on in the economic, we look on the Philip curves. The Philip curve will be move to the right side. So meaning to say that now the businessmen or businesswomen, you have the choice, get the local or get the foreign worker. But if let's say because there's not many people want to work with the 1,700, so you take the foreign worker. But with the foreign worker, the contribution of the EPF has the EPF saving. Not EPF saving for the foreign worker, but the saving, the account of the EPF. So EPF can invest more and direct to the local market. Then there's I will not touch about the other things on the sensitive, but that's it. Then there's we talk about the how it will be not give implication to the inflation. Look, government also increased 100 million additional from the 200 million to 300 million of the pasawan. What you call it? Jualan ramah. The jualan ramah is every don, not every state, every don. I don't know how many don in the one state, but it's a district lah. So that's every don we have the jualan ramah every month. And when we talk about the jualan ramah, look what the item, because that's when we look on what's the implication during the government remove the subsidy in the month of the June. I highlight this thing to the media and I ask them to look at the inflation data. You look on the subcategory of the inflation where it's the item of the vegetable is being increased spike like nobody business, and we highlight it why there's the spike of the vegetable increase in the month of the June after removal of the diesel subsidy is because government overlooked to give the diesel subsidy for the small scale of the business of the farmer. That's a different impact. But if we address it, and our government already talk about it. Then we look on the item, will this 1,700 give really increase the inflation? This is based on the journal. You can do the I can provide the article. If let's say anyone interested, you just PM me. There's the academic journal where we see if let's say the area of the state or the street or taman perumahan where the residents are those who are minimum wages, you will see that the price of the item and the price of the food away at home will be increased tremendously. But if let's say the area consists only 30% or 20% people who are at the minimum wages, then you can see it's not give impact. And how much the impact is 0.3 to 0.4% of the inflation. So this is maybe government already help you to increase your wealth, so-called salary, your wealth. from 1,500 to 1,700, which is 30%, then let's say the inflation is only increased 0.3 to 0.4 inflation. That's on the that area. If let's say so we talk about the inflation data, then we look on the ladder in the Philip curve. Philip curve itself will give the benefit to the how attractive local talent. So because it's the idea of the government come up with the minimum wages is to increase the number population of the M40. If let's say it's because after the Anwar takeover, it's no longer use the term of the M40, P40. They don't want to use this term, but I can say that since everyone still use, so they want to increase the number of the M40. They want to like change the pyramid shape of the socio-economic population to the diamond shape. Meaning the diamond shape meaning to say that the increase of the M40 itself. So I can say that in terms of the budget itself on to address the issue of the inflation, I don't see so much really happen because there's government intervention on the jualan ramah. That's already try to reduce the inflation spike through the vegetable everything because there's a jualan ramah not sell Starbucks. Jualan ramah is just sell the onion, chicken, rice. So the price is a control price and the price is much more cheaper. So I can say that this intervention is really help to push our socio-economic and like what World Bank Malaysia mentioned that most likely faster 2027 longest maybe end 2028 Malaysia to become the developed country.
So we are quite confident on this. Okay?
Yeah.
Very good, very good. How about others? Nice. There's one on top. Let's say they're sharing one. Got any on thing?
Nothing. I can't add anything to the analysis of inflation front because I've not done any modeling of inflation direction and trajectory and all that. But yeah, I think the minimum wage thing. Interesting to just listen what I just said about that.
I think inflation is definitely for all the financial planners. This is quite challenging. It's not challenging. One of your work to advise the client. Actually, if you talk about inflation, normally we talk about two types of inflation. One is the external one, and another inflation is from the internal, your behavior. Okay.
It's more significant.
And I think it's to add on the inflation. That's the reason why we see that the government BNM. Yesterday the MPC meeting maintained 3%, and I can say that's my forecast for the next year will be maintained at 3% on the OPR. So you're not going to this is the one way the government try to maintain the inflation.
Another thing about the minimum wage is that it is okay if we increase the productivity because if let's say you increase the wages of the people, employees, and this employee is able to produce more products for you, and then you can sell more things. So your revenue has increased, and then to cover your increase in the cost. So that will be okay. But if let's say the productivity level is not able to increase along with the increase in the wages, then that will be.
This always a complaint under the SME. So the government always said that you have to do some transform so that you use more on like industry 4.0 or now we call it 5.0 or AI and automation. Okay, now we move continue another section. Now we want to move to the personal tax planning. So a little bit more related to the so-called financial planning. So I mean that based on this budget, then form this so-called personal tax planning. So what new opportunity are available to individuals with extended this tax renewal? These are things that maybe you all can give some advice. Then in terms of the personal tax planning, how we can benefit from this budget. That thing is very important. For public, okay. So maybe won't last, so let them to share something. So maybe
Okay, right. First, of course, at individual level, we're going to talk about tax planning, individual tax. You need to know that what are for example, the information, the knowledge has to be there. Because you need to know that what is the reliefs that are available to you. That's in terms of that. And then more important, it just not just given to you just like that. It has to be like you have a proper report about that, because it's not like, because we are talking about compliance to that as well. You cannot simply claim without having proper report and proper supporting documents. It's all back to back has to be addressed. Because in terms of my practice, I've seen that even though when we talk about tax, normally we tend to think about business owners. Tax is more complicated and more things to plan as compared to individual tax. But my experience with what I get to know, the audit on this tax compliance become more aggressive. So I can see that those people that we thought the straightforward tax is not that straightforward, because many people sometimes ignorant or not aware of certain things. So I think that is a very important message, because otherwise you cannot audit, then penalty, and it can be very stressful, and of course it touch your cash flow position. That's something that I think that we have to address as well.
So based on this budget, what the most you like in terms of the tax?
I like it. There's always complaint that if let's say a single client, they say that always got benefit for family, and you get for your children and whatnot. So the inclusion of wider recipient to that relief is something that very much welcome. That is what many people have before. But if I can, say what are the things that still people want, for those people that taking care of the pets, they said that they want more relief. Because they said, well, equivalently expensive, it's not like a baby. But maybe it's because we are talking about socioeconomic, those a lot of things that back to back, right? Mr. Wong kalau boleh buat proposal later on.
There are a lot of the tax relief. There are a lot of inclusion about extend the into the parents, staging parents, because for some family, their children grown up, then they cannot get the 3K of the tax relief. But now extended to the parents, so at least they can spend on the parents. That I think that is welcome. And there are quite a number, and the timeline is being extended. Such as the PRS, yes, SSCN, yes.
I really hope this is for the individuals. If let's say it's can look on the increase the contribution of the PRS, not necessarily 3,000, because I know that you only we need to put 3,000 because of the tax thingy, but we need to see that how your 3,000 can help to provide a catalyst of your retirement. If let's say you just put the 3,000, I don't think it can provide a big chunk of money after you retire. And also that for the asset manager out there, the fund management out there, don't be so, sorry to say, lazy to just do the feeder fund of the PRS fit to the existing funds. You need to be more innovative, because this is how that the government has been trying to provide the platform. And I can say that the asset management out there, if let's say that you can, I can say that come up with the attractive or innovative PRS scheme that's invest into something like the AI technology, and also there's a clean energy together, not like one funds focus on the technology or the inside in the technology. It is not really help for the contributor. Asset management need to take responsibility of the PRS scheme, to make sure that the product that you produce is help not only contribute your PNL, but also contribute the contribution, the contributor or the client PNL. Because it's 3,000 as standard, and because when I'm go through the asset under management of the PRS, it's a predictable, because we know that on the quarter 4, yes, PRS sales or PRS inflow will be increased. Yes.
But actually, I just want to add on few things because I'm also a financial planner. First, actually, I think a lot of people they talk about, because the return of the PLS benchmark, let me compare with the EPF. This thing is the area about the discussions. The second thing about if you want to increase your PLS contribution, another way actually you can use the employer contribution, the portions from the 12% to this 19%. So that is another part. I think so far the market response is not so encouraging in this area also. So normally people is increase in terms of the EPF contribution under the employer side. Okay. So before Mr. Wong, then I also want to share something about this so-called personal relief thing. I think this now actually government try to be really take care M40, so-called understand the M40. So you can see that at least they have, I think one very important thing is they give so-called 7,000 days interest relief, okay, for the first the first house buyer. Okay, I think it is good for this young so-called young family, because young family they have their income normally is limited, but there are a lot of commitment. So I think this is very good. From some people tell me from a politic view is so that they can have this people support. But I think this is very beneficial to the young family, so they can enjoy. It's quite a lot, okay? Yes, significant. Another one, I think also government understand that the medical cost, medical fees is one of the challenge for most of the people. I think on the last few months also, one of this department also tabled in this parliament about this medical insurance issue. So that's why now we got the core insurance type of product, okay, introduced in the market. So that's why now they expand so-called the personal relief on this medical insurance, this sort of thing. I think together with others item total is 10,000, if I'm not mistaken. So maybe you can explain later. So I mean all this actually is considered is good for the so-called middle class. I think it's middle class. So I think for my view away is that personal relief is the area that the government encourage what we should do. Okay, what we should do. That's why they provide the personal relief. So I mean that we should try to maximize the personal relief that encouraged by the government side also. And in terms of tax planning, they will benefit by this planning as well. So this is my view. So before I pass to Mr. Wong to give further opinions, then I think any question you still can post in the Q&A, then I will monitor from here because we still have another less than 15 minutes. Then we'll end the section already. Okay, so Mr. Wong.
There's not much of what to add on to what is already said, but I echo the point about the knowledge of what reliefs are available, because there's so many, and my focus, my area of expertise is on corporate tax side. I have teams that deal with individual tax. Even when I do my personal tax return, I have to do that. To be fair to the Inland Revenue, you go into their site when you file your personal tax return, you have to read therefore it's local information. I would be surprised if people don't read that. Obviously, in your experience, people don't read, right? So a lot of the ability to claim reliefs, and given the government is extending things to your parents, grandparents, and children and things like that, read those notes and at least educate yourself. The knowledge part is important, and then the other part, record keeping, one of the most important, because you can claim whatever you want and make sure you have records you keep properly in the file. Because if the RBA audits you and asks for evidence, if you don't have it, not only will they add it back, they will fine you though, right? So it becomes unnecessary risk. So record keeping, in theory, you can record keep for 7 years, but it is what it is. So certain even your receipts, right? If in the past certain receipts fade away and things like that, so we have to be careful with that. RB also quite fair. I mean, I think they audit people, normal individuals, normal quote unquote. We don't maybe not audit that far back. So the Inland Revenue is also fair to individuals generally. I think the one thing to just bear in mind going forward, e-invoicing is something that we have to bear in mind, right? To understand that at some point in time, and this will be sooner rather than later, we will need to request for electronic invoices from things that we are able to claim as a tax deduction. For example, next time, if I go to a hospital, let's say, and I am able to, let's say, claim hospital fees, let's say, I will need to go and give my TIN number and everything so that the hospital can issue me an electronic invoice, because then automatically it goes into the Inland Revenue system in the future. And this will, I say, won't be the distant future, sooner rather than later, such that when you next time file your tax return, it's already there. You don't even
that means in future, let's say want to pay for the parent medical fee also, so
Yeah.
the sibling have to discuss first. We use
Correct.
So that one in the system already.
Correct. So the way and so the Inland Revenue will have a lot of real-time information on our consumption behaviors. So it can help them shape policy. It can also help them, determine who is, spending unnecessarily. So that's the direction
Okay.
of how authorities.
So that means big data, transparency, all this is the trend. Okay, so that's why some people say in accounting firm, let's say it's so-called is a clerk list on the book, maybe will reduce because AI will replace their so-called their work. I think so a lot of people they try to make it to digitalize a lot. We are also going on that direction. Okay, since I think no others, if you got questions, then you can post it. Okay, I can see Kevin. Someone asked the question: 75% threshold of value of company held the SPE yet to address by Mr. Wong. What the question is 75%?
What's actually specific questions?
No,
this is But if not wrongly, it was one threshold of 75%. I mean, this is a very look. 75% you're talking about value of land, and you're talking about a complicated issue, right? Because there's this thing called Section 15C, the Income Tax Act. You're supposed to tax a foreign company that holds properties in Malaysia or shares in companies that hold a lot of properties in Malaysia. It's not something that we can discuss in 5 minutes, but no, it's a complicated area of law. If you have such scenarios, reach out to your advisors or feel free to reach out to me. Right? I'm happy to give you a bit more color to that.
So I think one more question. How do the personal levies of 9,000 and the rebate for chargeable income 35,000, which has not been changed for many years, reflect in the infractions? I think this is about general because they're saying this personal levy of 9,000, because a lot of people also expect the personal levy will so-called increase. So, but the personal levy, the basic one, still the same on the 9,000. So I think this is more of the view. Okay, but maybe we discuss a little bit of one thing also. I think is quite interesting. I think it's very good also talk about the work-life balance and the childcare services. Okay, so maybe I think here we also have two ladies. Maybe you want to give some of your views on this. How do you think about this work-life balance and the childcare services, the flexible working, like return work for the women, all these other things.
Yes, of course, it's very much relatable to me. I'm one of them, the living workforce in my mid-30s, as far as statistics from Thailand is concerned. I'm the one that we did the statistics saying that women in their professional career leave the workforce due to work-life balance. So, but what I experienced, let's we go back to the history. Let's say 10 years back, because maybe during that time there was not so much avenue to address them. But come to today, I think that as whatever the latest budget announcement is to further enhance what already been given since a couple of years ago. Why I said so? Because you see, it's at the macro level, it's waste of talent, obviously. Personally, I feel like I have so much experience that suddenly I just stay at home mom for quite some time. Then you start thinking that I want to address my personal needs and I also want to contribute something. Contribute to society is one thing, but you need better household income. You know, that better income for your own needs to enjoy more. So that is very, very what I say that very beneficial to many people out there. And when you put the flexibility, when the government allow company, it's in a way of deduction, right? To promote work-life balance for the facilities, for example, for people to work from home or returning back to workforce. This is something that really have to be taken seriously and to be considered by many, because it really helps both employee and also employee. I remember when I was, like, say, at home mom, back then there was this government program under HRBF. Back then for HRBF, not for HR. Correct. Yeah. So I went to the TTT training paid by government so that I can share my knowledge. So basically, I can see it here today, one of it started with DTT training. You can see the impact there. That's
So
what I
this
think
is a
promote.
good policy.
It's a good policy and it's always good to acknowledge that government put a continuous effort to make sure that the deliverable achieve its target or objective. I support that.
In fact, many companies are doing that already. That means having some leeway to allow the employees to work from home. And so with this, they are subsidizing the employer. I think that is a good incentive, because for a lot of employers, maybe they may think that if you work from home and charge it, they use less. So, but with this incentive, at least it will encourage them to hire back to the workforce.
So I think we come to, thank you very much. So we come to the almost the end already. Before we end the sections, I think not really a lot of the Q&A. Maybe we, each of the panelists maybe just conclude about this budget, what you have learned and what you want to advise or maybe give your opinion to all the CFP professionals based on this budget, what you think that we can learn from this budget, that what you learn. Let's say an example. Okay, I mean for me, based on this budget, I think that in terms of this so-called tax, all these are things becoming more and more transparency. So well prepare ourselves in terms of the just mentioned about record, all these things is very important, so that to minimize our so-called unnecessary work, okay, and make the financial plan is more so-called effective. I think this is very important for me. I can see this trend is coming already. Okay, so it's very important also consult the financial planner or expert like tax agent, all these are the people to do your personal financial plan or even your corporate plan also. Don't try to be save the cost and just doing yourself all these other things, even like self-assessment. So this is what I learned from this budget. Okay, so maybe I start from the panelists also. So what was it? You can go.
Okay, obviously I mentioned about knowledge, how important is it. So we are, people like me, that people like us, many of us here as a financial planner, we can be the one that bridge this knowledge gap to transfer the information. And being the financial planner, we are the financial coach that work towards the plan, because it talks about habit as well. Certain things have to change just to make it smooth and you can really enjoy rather than theory. That is what bring back to your bottom cash flow number.
Yeah, very good. Very practical.
I agree with Hannah, but on top of that, it's more like an advice to everybody. When someone asks Warren Buffett, how do you invest in order to keep up with the inflation? So Warren Buffett said, invest in yourself. Because in every field industry that you are, if let's say you invest in your own knowledge and you be the best, for example, you are the doctor, so you acquire a lot of knowledge and then you become the best doctor in the industry. So naturally, you are able to command a higher salary. With a higher salary, you are able to keep up with the inflation.
I like it. Invest yourself, okay?
I'm not meet the clients, so I can't give that advice. But basically, like when I see on the this time budget, it's a lot of the improvements, especially on the how government try to make sure that the previous strategy or previous plan will continue. Because that's we know that when most of the time last time when the new people become the prime minister and new things coming. But now it's a bit like a continue. The continuity is a really less important as a portfolio manager and prime manager, because as a we look on the how our investments that we make in this particular industry or company for the past 3 years, and suddenly there's a new people coming in, change the policy. Then I can say there's this round is no, and I can say that it's very clear where there's whatever allocations being provided by the Ministry of Finance, which is the PMX, can be aligned with all the plan, and also there's a strategy. We have the NTER. We don't have a time to discuss about NTER, which is the ESG, the clean energy. We also talk about the strategic plan of the semiconductor to make the Malaysia as the hub of the semiconductor is also a part of the Malaysia plan. So I can say that for the asset manager like myself, it's really help to for us to plan our investment strategy, and also that I see there's a lot of the changes have been made when the government agency try to like do some of the amendment in their policy everything one, because it's more engagements with the industry partners. Like for example, Bank Negara nowadays they have the quarterly engagement with all of the economists. We all been called by the Bank Negara to meet at the Bank Negara every quarter to listen directly from the deputy governor. And also we also been involved directly provide the advice through the multiple ministries. So this is something that's good, and I can say that maybe it's too early for the rakyat to worry about the inflation. Maybe let's say high for the petrol around 95 subsidy rationalization, but I can say that what you call it, the financial advisor, you guys audience, also that's play a very crucial role, because as a personal financial planner, you need to provide first that you need to make sure that the client have a sufficient safeguard, sufficient buffer, because we talk about the inflation, and not everyone not every country become the developed country. All the people inside there will be get richer. So there are some of the emergency funds is required. So I can say that if let's say we go through on the personal tax relief, on the insurance, and also the investment, they have the role for each of the allocations incentive provided by the government.
I think basically when I hear this sharing, it's very quite positive and quite bright futures for our country. Very good. So you build us more confidence. How about Mr. Wong want to give what advice from tax, from the accounting, so to the financial planner? Because financial planner actually not really do the tax, but they do on more on the planning side and advice side. What is your advice?
Yeah, so my thoughts on this is not just relating to this current budget, but as you can see, I mean, as the current budget has also shown, I mean, the tax landscape is becoming more complicated. So changes in RPGT, stamp duty, to income tax, and all that. So one of the things that we have to bear in mind when we are thinking, suddenly the government introduces an increase in tax rate in something. Let's plan, let's create tax structures, put in the trust and this and that. I think we need to always remember that anything that you want to plan out, there's also transaction costs to consider. Transaction costs meaning you transfer an asset from one entity, maybe yourself, to whether it's a company or whether it's a trust vehicle. There may be a transaction cost in terms of RPGT, the transaction cost in terms of stamp duty, and depending on the vehicle, depending on the asset, these things can vary. So these can be traps. This requires, in terms of planning, to make sure it's tax efficient. You really have to sit down with an advisor that knows his stuff or her stuff in terms of the tax implications, because the landscape is becoming more complicated, right? In order to plan properly. And sometimes you also don't want to you must plan not only for today, you must also think about what the trajectory of the law, right? Because you don't want to plan something and put in a structure that's so rigid, the law changes the next year and then you are stuck. Right? So these are things just to bear in mind.
Yeah, I totally agree. Like people do about succession planning, this sort of thing. You put into the wrong vehicle or anything, then in terms of stamp duty, all this stuff will cost very costly to do. Okay, so I think thank you for all the panelists. I think today I just wrap up a simple draft. Basically, I think from the start, the first question I asked, since everyone gives 7 and above the mark, it looks like it's quite okay. This budget is quite well received by most of the people, especially here, Paul's here. So next, I think another very important also, just now I think yesterday also mentioned, actually now the government seems like they can listen, okay, to the industry. So like in our industry, at least we talk about like stamp duty on the insurance also. They really listen and they do some adjustment also, so that to make the industry more healthy, grow in this so-called insurance trust or this other thing. And I think just now also Mr. Wong also did mention also. So that's why what I'm trying to say actually is looking forward, actually we should have more confidence and we're looking forward for the better Malaysia in the near future. Okay. So I think here I will end the section here. So and thank you very much for FPAM inviting me as a moderator. If anything I'm saying wrong, I think I'm sorry about that. So I wish you have a very happy today is Thursday, happy Thursday. Okay, I pass to the MC. Thank you.
Thank you.